Hello and welcome to this episode of Captives with Carter. Last time we were on, we talked about the 831A captive space and the different types of captives within that 831A space. And so today I want to focus on the group captive space. So what do you look for when you're looking into a group captive? Well, first of all, there's hundreds of them. So you want to start by narrowing it down. Different ways to look at that are, do I want to be in a captive that is a very large group captive with 100 or so other companies involved in that captive? Or do I want to be involved in a smaller group captive where there's 10 or so organizations involved in that? As well, you'd also want to look at whether you want to join a homogeneous group of companies that are all in your same industry or a heterogeneous group of companies that are sporadically spread out through different industries. So when you're looking at that, you narrow it down, you look at what coverages can go into those captives, into that group captive. Well, in majority of the cases, a group captive is going to take work comp, general liability, and auto. They're going to need that premium for those three lines to add up to $150,000 to $250,000, depending on the entry point of premium for that captive. Now, some captives are willing and have made the decision to allow property coverage to come into that. So you're able to then put all four of those lines of coverage or a mixture of those four lines of coverage into that group captive. So those are all things to evaluate when you're looking at different group captive space options for your organization. So want to say thank you first of all for tuning in, and take a look at our next videos coming out on the cell and single parent space as well. You can find those Facebook, LinkedIn, as well as vestedrisk.com. All our content will be on there. So thank you for joining.